Texas, Florida, Arizona, and California, and also in the Carolinas, which is, you know, it's interesting news, I suppose. But what is more interesting to me is they were saying, well, the heat will come and keep the virus from coming back. It doesn't appear that that is necessarily the case. Hospitalizations are now averaging a slight increase over last week, and cumulative new cases in the U.S. exceeded 30,000 on Friday and Saturday. But the market is kind of shrugging it off because there is no thought of reclosing down the economy. Existing home sales came out. They declined 9.7% month over month in May. This is the third straight month of a decline in sales. The key takeaway here, I think, is that the closed sales in May reflect contract signings that were completed in March and April, so probably there was a little pressure not to do so many deals back then. But I think the market is saying things will get much better going forward. If you're interested, the median existing home price for all housing types increased 2.3% year over year to 284,600. That is the 99th consecutive month of year-over-year gains. But Nina, you've got some interesting data on what's going on in the mortgage market, at least for mortgage holders.
Right. U.S. home mortgage delinquencies, they reached their highest level since 2011. So the number of borrowers that were 30 days late, they did increase to 4.3 million. So that was up 723,000 from the previous month, which means that more than 8% of all U.S. mortgages were past due or in foreclosure. And if you look at the number of delinquencies in April, that was 6.4, about 6.5%. March was about 3%. Now, you do have to keep in mind that there was the CARES Act that was passed in March, the Coronavirus Aid, Relief, and Economic Security Act, which does allow homeowners to suspend their mortgage payments. But this is on federally backed mortgages, so it doesn't cover all of the mortgages out there. It's not backed by the government, you don't have that deal. And as it turns out, I looked this up, about half of the mortgages out there are federally backed. And you can find out also more information, always contact your loan servicer first to talk about, forbearance and how that works, or whether or not, who backs your particular mortgage. And there's also more information on the Consumer Financial Protection Bureau, which is an official website of the U.S. government.
Interesting, very interesting. You also had some data about how they've changed the estimates for Q2 earnings over the last week or so. What's up with that?
Right, it just changed a little bit. FactSet, they are on top of this every day. They readjust their estimates. And the previous week, they were expecting Q2 earnings to be down 43.5%, and they updated it on Friday. It's even worse, just by a wee bit here. They expect the second quarter earnings estimates to be down 43.8% for Q2. So they're not increasing those levels. And we're going to kick off earnings in the middle of July. So after our 4th of July holiday, a lot of traders will really start to be thinking about the announcements coming forward.
Yeah, I suppose they'll be a little bit more interested in guidance as opposed to the actual earnings, because they're going to.
And we're not getting, and a lot of these firms, they haven't been giving guidance. And later today, on closing remarks, we're going to probably take a look at Nike. They're one of the stocks that are, now it's a light roster right now of companies reporting, so it's just a handful, but Nike does report later this week. And, for a lot of traders, it's kind of tough because, they've pulled back on their formal guidance. And so traders who trade stocks similar to Nike will be, also looking to see what they have to say later this week.
Awesome. Thank you there. All right. Let's go to take a look at some commodities. Before we actually, this is crude I've got up there. Before we talk about that, though, just a couple of notes on the commitment of traders report that came out Friday. There really weren't any new extremes of note that I noticed. I will say that we've said there's kind of interesting activity for the equity hedgers. They are net long still $40 billion of major equity index futures, which is the same kind of odd behavior we've seen for a while. Usually if we shoot up this much, they start, selling a little bit, but that has not been happening. Over the past 10 years, when this kind of behavior has happened before, in the short, intermediate term, it has been slightly positive for stocks. Also, the only other kind of extremes is that hedgers went net long the U.S. dollar for the first time since early 2018, mainly because they really ramped up their shorts against the euro. For what it's worth. Also, just looking at some, historical data, when they do go long the U.S. dollar, it does basically lead to
other commodities. What about other commodity prices? Like will gold?
Yeah, it's not good for gold necessarily. Although it just kind of puts a lid on it. It doesn't necessarily make it go down. You can see I put up gold here. We are still range bound. The play here, if you want to trade it, is either wait for a breakout one way or the other, or you could trade it as a range, which would suggest that, which they did today, you can see, as soon as they got up to that 1780, it stuck, slowed it off a little bit. So, anyway, I would say that we got a question on gasoline. Let me just double check the front mark on that.
Okay. Take a good guess. Yeah, looks like it's trying to break out. Say a lot of traders, depending on your time frame,
looks like we could have been making a double top. That got negated with today's action. I say many traders would put a stop under the last 3 days worth of lows, which is right under the breakout level, and see what happens. If you want to give it more room, you could use the 20-day moving average, which is the orange line there. But certainly an improving chart. You probably got a little bit, I would say probably the upside quick target would be that 136, which would be the top of that gap up there. Okay, let us take a look at crude oil since we're talking about energy.
Improving chart, we got minor resistance where I put the line up there,
the dotted yellow line. You could use the 20-day, but certainly the trend is higher at the moment.
So do you think that, what OPEC Plus, their agreement, and was it G20 energy ministers they met to, do you think that this is really helping, increase or at least support these crude oil prices?
Yeah, so I think there's two things going on here. We're getting more and more reopening activity, which is obviously good. China is doing well. And to your point about OPEC Plus, the data last week showed higher than expected compliance with their output cuts. They were almost 87 to 88% compliant, which was a lot better than other times that they do cuts. You get a lot more cheating. So there wasn't as much cheating this time, which is putting a little bit of a bid under the oil market too.
But I'm wondering if this could also bring in more Permian, drilling, because the average to produce a barrel of oil in the U.S., the average producer, it's almost 36 bucks, $35.90. And so once we're above that, once we start getting above those levels, you might start to see, more and more supply, right?
Yeah, well, it'll be interesting. We can take a look at that to see in Wednesday's EIA report if in fact that is happening. I didn't see too much of that over the last couple of weeks, but now again we're over 40, and we've been holding over your 36 level for a while. So we shall see. We'll be able to take a look at the U.S. output, the EIA data for sure. Got a question: does silver trade similarly to gold? It's a higher beta. It's a fancy way of saying that it's more volatile than gold, generally speaking. The chart is not quite as strong at the moment. Gold is near the top of its range, and silver is kind of in the middle of where it's been. Is that kind of a flat head and shoulders on this too?
Potentially. I think it's more,
both of those metals are range bound, so just that gold is at the top of its range and silver's, not. But as far as the backtesting data on when the hedgers go long the dollar, it does have a muted effect on silver as well, if that's what you're asking. All right. Let's look at the doctor. Going the right way.
What can I say? It has been confirming
the strength in the equity markets. 255 now is pretty good support. So you can't say we're really happy. We did have a little bit of we looked at this chart before. We did have a little bit of divergence last week. Let's overlay the SPY, but it seems to be resolving. So notice we did have this action here, but now it looks like. So this was maybe a little warning sign, and we did get a little bit of a sell-off in the SPY, but it seems to be resolving back now. So.
And Lee, with you showing copper and other raw materials, if you take a look at some copper mines like Freeport, Moran, FCX, right? I mean, it's really come back.
Yeah.
That's lows right there.
Yeah, so nice 20-day moving average here. You're also getting a continuation triangle on FCX as well. So the next move would be telegraphed by a breakout of one of those two lines. Okay, we got a question on somebody's mentioning about the stress test. You have some data that's coming out this week, right, Nina?
Right. On Friday. So the Federal Reserve, they did stress tests, and they're going to release their annual analysis this Friday. And what they're doing is they're looking at all these banks, and they're running them against 3 different possible economic trajectories. They want to see how these banks perform against a V-shaped recovery, a lower U-shaped recovery, and a rough W recovery. And the thing is, a lot of traders are watching these banks, and some are, check to see if there are any options plays out there too, because you might see this week. But there might be some people positioning for some positive or negative results coming out of that stress test. And so some of these big banks to watch would be like, Bank of America, Citigroup, Goldman Sachs, JP Morgan. And another thing is traders are going to be watching this for any possible changes to the dividends going forward. So, some of these banks are being stressed. Maybe they're going to have to make some adjustments to their dividends so that they can hold back more cash and have it in for whatever, reserves that are necessary for different parts of the bank.
Yeah, I saw some interesting data too on the banks where they really don't want your money anymore. The bank deposit balances have gone up incredibly during the last couple months. That's why they don't have to pay you anything. They have more deposits than I know what to do with. It's some like huge, couple $1 trillion spike, one of the largest in history. Savings rate went to one of the highest levels also.
Didn't it pop to like 18%?
Something like that. So they are awash in deposits. So.
But that will be gone. I mean, people will. I think that's just a pretty short-term flip.
Yeah.
A lot of that is from the checks that the government gave out as well. And Liz Ann Saunders, Schwab's chief investment strategist, she was interviewed, and her comment was, the market is anticipating or suggesting a V-shaped recovery, but the more likely scenario is rolling W's. So that's a quote from Liz Ann, rolling W's. You'll be seeing that probably quite a bit now. What shape the economy will have.
Yeah. Excellent. All right, let's look at bonds. Let's look at our bond signal here. So if you were following this trend following system to the letter, we got a sell signal back here. We pointed out back there on June 8th or so. That was the entry was down here at 137. The exit was at 162. So not.
And the signal is when the purple line crosses the blue line one way or another. Since they're so close to each other, before acting on a signal here,
I mean, if you were going to do it to the letter, you would have gone short here on June 8th or June 9th. But now we're in a little trading range. I'd probably wait to break either to those highs, which will negate the signal and it'll probably cause us to switch, or to confirm the signal, a break of the lows from the last couple of weeks. That's kind of how many traders would approach this. All right. Let's move on to the take off the overlay.
So as we were talking on Trader Talk, we've got a little gap there that is acting as
short-term resistance. So want to keep our eye on there. You can see the tails get in there and they get turned right around. The good news is that we have kind of held the 20-day in here, but a lot of the backtesting data that I talked about suggests kind of choppy action still for the next month or so. But we'll have to see. Obviously, intermediate term support is pretty clear now. It's about 29.60 to 29.70.
You can see where that comes in, the rising 50-day moving average.
And horizontal support, top of this range, you can see is pretty well defined too. It's from the lows back in February, corresponding with our last three highs. So I think this might be the range that we might trade in for a little while, 29.66 to 32.27. Now, a couple of things I want to point out about the market. So, if you've been following us along the last couple months, you know that the Merrill Lynch Money Manager Survey had, for most of that time, showed that active managers were underweight stocks. We talked about that. And on Wednesday, we had the new figures out, and the institutional investors now have been pulling money out of cash. And probably some of that cash is going into stocks, because for the first time in months, managers are now net overweight equities. Mike and I were talking on Trader Talk, if some of that might be window dressing going towards the end of the quarter, that they've got to show some good positions, with the rally we've had in March.
And that they have positions in things,
Yeah, that's right. So I don't know if it'll last, but I am playing that out. Just looking at, if you take a look at what's happened in the market when money managers go from underweight to the first time overweight, after being underweight for at least 3 months, for the last 13 years, it's been an okay longer term signal. It's been choppy for the next month, going into my choppy theory here. If you're interested, the signals were in May 2009 and November of 2011. Okay, let's take a look at the NDX.
And typically, the information technology sector is leading the day here.
Yeah.
So we are right up
there
there
at this stage. I think
if you're trading, put up the
cues. Maybe you wait for a breakout. I found something incredibly interesting here, though. Let's go over to stock charts. So let's take a look at the ratio between the NASDAQ 100
and the S&P 500, higher than it's ever been, including
.com. Right? This line is the ratio of the NDX to the S&P 500. Also, this is a monthly chart. You can see that we are exactly as much overbought on this ratio as we were back in the .com. This is the 14-month RSI. So the question is, obviously we know what happened after this happened in 2000, right? All the signals triggered in 1999 when the RSI was above 80 on that 14-month RSI. 2000 was January 2000, February 28th, 2000, June 30th, 2000. So it's a very small sample size, and the sample size was all in that leading up to the .com and during it. I don't know if it's different this time or not, but I'm just pointing that out because you might hear some people talking about it. Again, if you're going to go strictly by what happened when it got up here last time, it's not great for either the NDX or for the SPX either. Both of them had losses, obviously. Where the S&P was a little stronger than the NASDAQ 100. But I don't know. Something, when you get extremes that pop up, you just look and see what it meant in the past. I think the difference is, though, and I'd like your thoughts on this, Nina, because we were both trading back then. In the .com, a lot of the NASDAQ 100 didn't have like the earnings support that you do now, though. So I don't know if it's analogous. I don't think it's an analogous, but no.
Yeah, it is different, but there are some stocks out there now that, they aren't making money. They're expected to make money in, a few years down the road, but it definitely is not the levels that we have for the .com. Back then, it was like just come up with any idea and just smack on a .com and you're off to the races,
Yeah. Although we've had some pretty exuberant IPOs now.
Yeah,
too, but,
yeah.
So, would you short the NDX? I don't know. I mean, it's hard going against momentum. And in the very short term, when we had this signal before, over the next couple weeks to in a month, it was let's talk about what happened to the NASDAQ 100 after the RSI got up to the level it is now on the ratio. For the next couple weeks, we still had momentum in there, but after a month to 2 months, that's when it started rolling over. I suppose we don't give recommendations, but if you wanted to try to it, maybe you would short the NDX and buy the S&P 500 as kind of a pairs trade kind of thing. That's one way. Then if the market really takes off, you're okay. But
that's when I do like to turn to options instead.
Yeah, what would you do?
You could go out and buy some puts, or buy a put spread. I wouldn't sell like a naked call. I mean, you could limit your risk and sell a call spread. The timing, you've got to be, what's your time frame? That always is tough with options, But it's definitely tough. I said this, even when I've been negative, just it's tough to get short, this particular market and tough to pick the bottoms and it's tough to pick the tops. It's always easier when you look back and go, oh wow, of course that was the top, but that's in hindsight. Everything looks like a cakewalk.
Yeah, for sure. Let me check something for a question here. Yeah, so somebody wanted to know if you wanted to trade the Swiss franc. If you're not a Forex trader, this is the
ETF for the Swiss franc, FXF.
So you can do that if you want to do the futures. All right, let's take a look at the NASDAQ composite itself, not the NASDAQ 100. Well, kind of looks just like the Qs anyway. But, if you're a trend trader, then I think you still got to stay in there. There's nothing that has really disrupted the trend. So there you go. We have a question. Is the IWF growth option similar to the QQQ? I didn't see any back testing on the Russell 1000, if that's what you mean. All right. Let us look at the Russell IWM, though. See how the small caps are doing. We were talking this morning, we got this kind of island topish here. This is not the best looking chart. Are we making some sort of broadening top, which generally is kind of bearish? You can call this a megaphone top too.
That does look like a chopped salad right there. It's all over the place.
It is. So I suppose if you are bearish, you would say we've had 3 closes under the 20-day moving average now. Or we will. So, the only, if you were going to nibble, maybe a pullback to the 50-day and the 135 level might be an entry if you want to increase your exposure there. But if you're just trading momentum, you're better off with the Qs than this one.
Yeah, the NASDAQ last week was up 3.7%. The Russell, was the next best performer. It was up 2.4%. It outperformed the S&Ps and the Dow, but still the NASDAQ definitely is hustling higher.
Yeah. All right. Take a look at industry action. We looked at sector action on Trader Talk. Let's take a look at specific industries. See if we can glean a few things. Actually, I'm just going to look at the ones that I've been following anyway, and then we'll go to that list. Well,
we told you to watch this one for a breakout.
I guess you'd have to say it's happening. This is the smaller cap biotech stocks. And the bigger ones were threatening to break out too, and now have also.
What I find interesting today, Nina,
is they had a hot start, they pulled back, but bounced right off of that level. That is pretty good behavior. Right to that support, and they bought it right back up. So some good strength here in biotech, in both capitalizations. All right. Just from a growth sector level, kind of mixed. We've got utilities. We've got healthcare, which is kind of interesting. Healthcare is lagging, even though the biotechs are
really moving. So a lot of the, let's take a look at the
farmers are doing, see if that's the reason.
And, there was, from FactSet, they were talking about what analysts have to say about, let me get that report. I'll find it.
Yeah.
All right, so you keep looking there. We'll just take a look at this. So these are the big pharmaceutical companies. They are flirting with level here, but you can see certainly they are lagging the biotech. And just as a key moment, we saw the healthcare is weak, although biotech is strong. So what other parts of healthcare are not moving? And the way you can do that is go to the performance by sectors, and we'll go to, let's do today's change, and we'll do healthcare. And this is exactly the reason I don't necessarily like doing it this way, because these are all stocks.
Okay? Where if you do this on Schwab.com, you can do the same thing, but you have
the stocks that you're measuring are from the S&P 1500. So that can be misleading on Screener Plus because they've got a lot of stocks that are really low price. So you get some stocks going from the ask to the bid, right? So it's probably better to do it on Schwab.com. We'll just go show you how to do that.
Like we had an attendee say, they were watching CNBC. They said some index was or ETF was down a certain amount, and they looked and it's a different price. Well, you have to make sure that, if someone says biotech, there's different biotech ETFs out there. What stocks are included that they're talking about. So there can be, of course, a difference in percentage up or down.
Right. So here you get this industry here is more the S&P 1500. Okay, so and you can open it up and get the industries this way. So
you were talking about the healthcare sector, and the fact that they were wondering if analysts have lowered their ratings on S&P 500 stocks
due to COVID. They like to keep track of the percentage
of firms, analysts that have buy ratings, hold ratings, and sell ratings. And as it turns out, on the sector level, analysts are the most optimistic on energy. 62%, 62% of them are more optimistic. They have buy ratings, and healthcare they also have as the second sector. 61% of the healthcare are by a buy rating as well. And
All right.
consumer staples has the highest number of sell ratings.
Interesting. All right, so we see that we've got the mining stocks. As we saw, we had a little bit of a bump in the metals, so we can take a look at those. Still range bound though, really, but getting a little bit of a bump today. Take a look at the smaller gold miners. I guess the bulls would say on this one that maybe you have a chance to go back to the high because you could have said that this is a breakout pretty good from that triangle. So if you take that view, at least maybe you get a trade up to the 50 and 3/4 level. So that looks a little different than those GDX. Well, it's a little clearer on that one, but you know, that is a bullish breakout of the downtrend line too, which suggests since gold is near the top of its range, maybe these guys can, in the short term,
pop up there and test their high. See what else is moving today.
Cloud computing, I've told you about that one. Continues its breakout. Although the measured move here isn't tremendous. 19, you know, it's like a $1.20. So it'd be what, 21.60. So right about there.
I was going to on closing remarks, just
talk about a couple stocks that are now part of the
de-urbanization
trade. How about that, Lee?
Wow, that's
people who are leaving the big city and moving to the suburbs, or moving out to the countryside.
Well, you can see that in San Francisco. Rents went down for 2 months in a row now. First time in years that's happened. Okay, let's take a look at what else is moving here. Again, you can build yourself an industry list and then just see what it always, and then you can look for the stocks if you're looking for something to trade momentum-wise, see what's moving on a day. Okay, we've got copper miners are moving too. Take a look at those. Kind of looks just like copper, right? But nice pullback to the 20, took out previous day's high. You know, it's kind of a classic swing trading setup. First target is the old high there.
So this is the copper miners. Remember, don't confuse that with the CPER, which is the
metal. See what else we got. Probably no surprise that this is doing well. This is breaking out now. So these are the larger internet type stocks.
You want to play momentum? There's your breakout on those. Who knows how long it'll last, but you can set your risk pretty well. You can look at the companies within there.
That's what I like to do. Check to see, and you could try to select the best of the breed.
Yeah. So, Amazon, Facebook, PayPal, Cisco, Netflix. Yeah, then you can go look at it. And then what you can do, and that's a really good point. What you can do then, if you want to get leaders, okay, is you can do this. You can go to the price relative study, and we're going to compare the companies in there to the ETF to find leaders. Okay, so what you could do is just go like FDM. Now it'll be a flat line because we're comparing it to itself right now. But now, okay, Facebook was in there. Is Facebook leading? No, Facebook is not leading. Okay, is Netflix leading? Yes, Netflix is leading. Okay, so.
How about Okta? Can you put up, what is it, Okta? That's the one I'm seeing a lot lately.
What's the symbol?
Okay, I think it's okay.
Oh, ATA, that one.
Yeah.
Yeah, that's not leading.
That's not leading.
No.
But anyway, that's a way in something that is moving to get the leaders that are moving. Okay. So, a question from Ben, would you buy long bonds here? Well, of course, not according to our trend following system yet. As I said, on the TLT, I would wait for a break one way or the other of this little trading range. Although the trend following was a sell on the TLT. So we have a question, how to move money from Schwab Valley Advantage to a trading account. Well, if it's in your account, you just sell it through the mutual fund, and number of shares is the number of dollars.
Right.
Yeah, on the website, and then it shows up as cash the next day. And with that,
Nina, thank you so much for your contributions today. It was very interesting stuff.
Our time is up. Coming up next, fuel your trading with Street Smart Edge with regional investment strategist John Boa and Brian Bell. So if you want some more help with the platform, stay tuned.